Right, so get this. We're diving deep into Bitcoin today.
Ooh, Bitcoin.
Yeah, specifically its potential in 2025.
Okay, cool.
You sent over this article. It's called Bitcoin's Bullish 2025 Outlook.
Oh.
And let me tell you, it paints a pretty wild picture.
Okay.
We're talking Bitcoin potentially hitting $200,000.
Wow.
Or more.
That's a lot.
Yeah, to help us break down, if this is even realistic.
Right.
We have an expert here with us today.
Well, it is a pretty bold prediction.
Yeah.
But, when you look at everything that's happening in finance, there are some serious factors that are fueling this bullish outlook.
Okay.
Things like lower interest rates globally, a wave of institutional adoption, and then the emergence of spot Bitcoin ETFs.
Right.
These are all elements that could significantly impact Bitcoin's price.
That's what I found interesting, too.
Yeah.
It's not just hype.
Right.
There's some serious movement behind it.
For sure.
So let's start with the spot Bitcoin ETFs. The article mentioned over 1,179 institutions had invested in them as of October 2024.
Yeah.
What's the big draw here?
So for institutions, especially the bigger players,
Yeah.
directly holding Bitcoin can be kind of a headache. You have regulatory hurdles and security concerns.
Right.
It gets complex.
Okay.
Spot Bitcoin ETFs offer a more familiar and regulated way to gain exposure to Bitcoin's price movements without directly owning the asset.
I see.
Think of it like buying shares in a company that tracks gold prices instead of you storing bars of gold yourself.
So it simplifies things.
Yeah.
Makes it more palatable
Exactly.
to the institutional world.
Uh-huh.
But the article also highlighted that even with this institutional influx, it's still mostly retail investors
Interesting.
holding the majority of ETF assets,
Okay.
almost 80%.
Wow.
What did you make of that?
Well, it suggests that we're still early
Okay.
in institutional adoption. If even more pension fund, hedge funds, asset managers jump on board, the demand for these ETFs could explode.
Wow.
And that would directly impact the price of Bitcoin itself.
Yeah.
Remember, ETFs hold a decent chunk of Bitcoin already, about 4.3% of the total supply.
That's a significant portion.
Yeah.
So we've got these ETFs driving demand,
All right.
potentially pushing prices up.
Uh-huh.
But ETFs are just one part of this whole institutional adoption story, right?
Sure.
The article mentioned over 1,199 professional firms
Wow.
holding Bitcoin investments in 2024,
Okay.
a 27% jump
Huge.
just in Q2.
Yeah.
What's behind this surge?
Yes.
Is it just the ETFs?
Well, ETFs are definitely a factor.
Okay.
They provide an easier entry point.
Right.
But there's a broader shift happening. We're seeing greater regulatory clarity around crypto, which reduces uncertainty for institutions.
Makes sense.
Then you have major players,
Okay.
like Fidelity offering crypto custody service, BlackRock launching Bitcoin-related products.
Right.
This legitimizes the space
Okay.
and attracts others to follow suit.
So it's like a snowball effect.
Exactly.
Okay, so you have these big names getting involved,
Yeah.
regulations becoming clearer, and it's creating this momentum.
Right.
But it's not just about investment either,
Yeah.
right?
It's not.
The article touched upon major financial institutions
Oh, yeah.
accepting Bitcoin as payment.
What
We're talking Starbucks, Expedia.
huge names.
Yeah, doesn't that signal a bigger shift
It does.
towards mainstream adoption?
For sure.
Absolutely.
When you can use Bitcoin for everyday transactions,
Yeah.
it starts to feel less like a speculative asset and more like a functional currency.
Okay.
And the data supports this.
Yeah.
A report by Sygnum Bank
Okay.
indicated that 57%
Wow.
of institutional investors plan to increase their crypto holdings in 2025.
That's a huge number.
It is.
So we have this convergence of institutional interest, mainstream acceptance,
Yeah.
and a potential price surge on the horizon.
All coming together.
But there's another major factor
Okay.
we need to address.
What's that?
The 2024 Bitcoin halving.
Right.
You mentioned it earlier.
Yeah.
Can you unpack that for us?
Sure.
Why is this such a big deal?
The Bitcoin halving is a pre-programmed event that happens roughly every 4 years. Think of it as a built-in scarcity mechanism.
Okay.
The reward that Bitcoin miners receive for adding new blocks to the blockchain gets cut in half.
Okay.
The last halving happened on April 19, 2024.
Right.
Reducing the reward from 6.25 to 3.125 Bitcoin.
So fewer new Bitcoin
Exactly.
entering circulation, tightening the supply. But how does this actually impact the price?
Well,
I mean, past halvings have often been followed by these huge price surges, right?
They have.
Are we seeing the same pattern emerge this time around?
That's the million-dollar question. Historically, yes, halvings have often preceded bull markets in Bitcoin.
Right.
But this time, the landscape is a bit more complex with the introduction of these spot Bitcoin ETFs.
Right.
It's difficult to say definitively what the exact impact will be.
Okay, so it's like this added layer of uncertainty.
Yeah.
A wild card in the deck.
Right.
But even with that, the halving does something fundamental to Bitcoin, right?
It does.
It reinforces its deflationary nature, which is a pretty big deal in a world where everything seems to be going up in price.
Yeah, that's a crucial point.
Right.
Unlike traditional currencies, that can be printed endlessly, leading to inflation.
Yeah.
Bitcoin has a finite supply, capped at 21 million coins.
Okay.
And the halving ensures that the rate at which new Bitcoin enters circulation keeps decreasing over time.
So it's like a built-in safeguard against inflation.
Exactly.
Almost like digital gold. But hold on.
Yeah.
If the reward for mining is getting cut in half, what does that mean for the miners themselves?
Right.
Won't that make it harder for them to profit?
It definitely creates pressure on miners.
Okay.
Especially those with higher operating costs.
Right.
Or older, less efficient equipment. When their rewards are halved, their profit margins get squeezed.
Okay.
And some might struggle to stay afloat.
So it's like a survival of the fittest situation.
Exactly.
Only the most efficient miners will be able to keep going.
Right. The halving acts as a sort of natural selection process, weeding out the less efficient players.
Yeah.
This can actually lead to a more robust and secure Bitcoin network in the long run.
I see.
Think of it this way.
Okay.
The miners who can survive and thrive after a halving are likely the ones with the latest technology, access to cheaper energy, and a strong understanding of the market.
So there's a silver lining to this pressure on the miners.
There is.
It pushes the industry towards greater efficiency and resilience.
For sure.
But let's zoom out a bit.
Okay.
We've talked about ETFs, institutional adoption, and the halving.
Right.
All these things seem to be pointing towards Bitcoin becoming a more mainstream financial asset. But what about the potential downsides?
Well,
are there any risks we should be aware of?
There are always risks associated with any investment, especially in a market as volatile as cryptocurrency.
Sure.
One concern is regulatory uncertainty.
Okay.
While we're seeing progress on that front, governments are still figuring out how to approach Bitcoin and other digital assets.
Right.
A sudden change in regulations could impact the market significantly.
That's true. The regulatory landscape is still evolving.
It is.
What about other potential risks? The article mentions something about the concentration of Bitcoin in ETFs.
Oh, right.
Could that be a concern?
It's something to keep an eye on.
Okay.
If a few large ETFs end up controlling a significant portion of the Bitcoin supply, it could potentially create vulnerabilities.
How so?
Think about it. If one of those ETFs were to suddenly sell a large chunk of their holdings, it could trigger a price crash.
So there's this potential risk of centralization.
Potentially.
Even as Bitcoin itself is decentralized.
Yeah, that's the irony.
Are there any other risks that you think are important for people to understand?
Well,
I mean, we're talking about Bitcoin potentially hitting $200,000.
Right.
But that kind of price surge could also attract
a lot
of speculation and volatility.
You're absolutely right.
Yeah.
It's crucial to remember that Bitcoin's price is driven by a complex interplay of factors, including supply and demand, market sentiment, technological developments, and macroeconomic trends. While the current outlook is bullish, there's always the possibility of a correction or a sudden shift in market sentiment.
So it's not a guaranteed path to riches.
No.
To put it mildly.
Not at all.
It sounds like there are a lot of moving parts to this story.
Definitely.
And predicting the future of Bitcoin, even in the short term, is a pretty tricky business.
It is.
Yeah. So it's not a sure thing, but it's definitely possible.
Yeah.
It feels like we're at a crossroads with Bitcoin.
I agree.
It's gaining legitimacy, attracting serious investors, and becoming more integrated into the financial system.
It is.
But it's also still facing challenges and uncertainties.
Yeah, for sure.
What do you think is the most important thing for people to understand as they try to navigate this complex and evolving landscape?
I think the key takeaway is this.
Okay.
Bitcoin is more than just a speculative asset or a get-rich-quick scheme.
Right.
It represents a fundamental shift in how we think about money, value, and the financial system itself.
Okay.
Whether it hits $200,000 in 2025 or not. The underlying trends we've discussed, decentralization, digital scarcity, and growing adoption. These are forces that are likely to continue shaping the future of finance for years to come.
It's a whole new world out there.
It is.
And Bitcoin is right at the center of it.
At the heart of it.
So for our listeners, you've been digging into this topic.
Yeah.
Trying to make sense of it all.
Trying to wrap my head around it.
What's your biggest takeaway from this deep dive?
You know what stands out to me?
Yeah.
Is the contrast between Bitcoin's potential and its inherent volatility. We've seen how institutional adoption, technological advancements, and macroeconomic trends are converging to create this incredibly bullish scenario.
Right.
But we've also discussed the risks,
for sure.
Regulatory uncertainty, the potential for market manipulation, and the fact that Bitcoin is still a relatively young an untested asset.
Yeah, it's a fascinating paradox.
It is.
This technology that was born out of a desire for decentralization and financial freedom is now being embraced by the very institutions.
Yeah.
It was meant to disrupt.
The irony.
And it's all happening against a backdrop of global economic uncertainty.
Yeah.
Where people are searching for alternative stores of value and ways to protect their wealth.
For sure.
It's a story that's still being written.
Absolutely.
And it's one that we'll all be watching closely.
Can't wait to see what happens.
Thanks for joining us on this deep dive.
It's been a pleasure.
Into the world of Bitcoin and its 2025 outlook.
Yeah, thanks for having me.
It's been a wild ride.
It has.
And we can't wait to see what the future holds.
Me neither.